Hi, everybody. Welcome to today's edition of the Red Cloud webinar series. I'm your host, Nicole, here today with Cory Belyk, CEO, President, and Director of CanAlaska Uranium. It's good to see you, Cory.
Oh, it's great to be here today.
We're going to be taking your questions live after I hand this stage over to Cory. He's going to do a little presentation, a little corporate update, and we'll hear all things happening with CanAlaska. So if you do have any questions, please stick them in the chat on the side of your screen. We'll get to them after the presentation's over. And in any case, Cory, I'm going to let you take the stage, and I'll be back at the end.
Well, thank you so much. Well, welcome, everyone. It's a real pleasure to be here today to talk about the CanAlaska story for not only 2024 and how we finished the year, but also how we're entering 2025 and how we're going to carry on with delineating, expanding, and hopefully unlocking that shareholder value that is in our Pike Zone on our West McArthur project, that joint venture with Cameco. So it really is about powering the future and the part that CanAlaska and the Pike Zone could play in that. And we are going to work hard this year to build this story out in the next 6 to 8 months. And I hope you appreciate where we're going in 2025 after this presentation. I will be making some forward-looking statements, so please bear with me as I walk you through this story. Now, in 2024, we had an incredible year. We expanded the high-grade mineralization. We continued to hit ultra-high-grade uranium at the Pike Zone, located at the Unconformity and into the upper basement. So from that, we developed new targets. It remains open in all directions, literally all directions. And we've been able to successfully extend and or locate some additional pearls or pods. We talk about pearls on a string. We're very successful at that in 2024. So this is a joint venture. Our West McArthur project will be the focus state. It is a joint venture with Cameco. So CanAlaska owns a little over 85% of this project. Cameco holds residual interest. And it really is all about West McArthur in 2025. So we have a portfolio in the Eastern Athabasca Basin that spans over 500,000 hectares of land, really in the east, around all that critical infrastructure that's owned by Cameco, Orano, and Denison. So that is the place in our vision to be if you want to get a discovery, a major discovery, accessible to the mills in the local region. Sorry, I'm having some trouble running this platform. There we go. So CanAlaska Advantage, we put the right strategy with the right team, with the right assets. So we focus on tier 1 uranium in the Eastern Athabasca Basin. That is our strategy. That's what we've been focused on, moving our portfolio to the east for, is to be up and against that critical infrastructure to make a discovery. Then we've built the team out in the last number of years, mostly Cameco and Orano trained geoscientists, at least at the higher levels, myself included, with a focus on the Athabasca Basin discovery scene, with a track record of discovery success. Then we put them on the right assets. We put this all together into a portfolio that is in the Eastern Athabasca Basin, 4th largest, I believe, amongst our peers in that space, and really up against all that critical infrastructure. So putting these 3 things together, the strategy, the team, and the assets, in our view, results in success. And that's highlighted by our Pike Zone discovery in 2024. Sorry, I'm just having trouble advancing slides. There we go. And now they're moving. This is not working out. Hang on. Okay, so corporate structure. We are a well-structured company. We have 176 million shares outstanding, 130 million market cap, and we've got about almost $23 million in the bank after our successful raise in Q4 of last year. So we are a company on the move. We rode a relatively low and quiet summer as we were drilling away at our West McArthur project. You can see in early August, it started to really pick up pace. I mean, our stock started to moving from about 60 cents all the way up to 80 cents in a price environment for uranium, at least at the spot level, of around $75 to $80 a pound. So we are a well-structured company in a market that is fairly healthy and well-capitalized to succeed in 2025. So we have seen some change in our share structure, mostly retail historically, but we've seen institutions coming into our stock and positioning as we build out this Pike Zone discovery story. So that is really an evolution that we see for CanAlaska that is new. And I think it's a testament to what could be, the significance of our Pike Zone discovery and where it is sitting in the market, or at least in the view of those out in the marketplace. So institutional holdings are climbing. Myself, I'm a geoscientist by trade. I've been in the nuclear space for 30 years, most of that with Cameco, anything from grassroots exploration to, Athabasca Basin focused project generation and discovery through a chief mine geologist at Cameco's Eagle Point mine for 5 years, and then into the corporate development world for Cameco, looking at all the different assets on a global scale, searching for that next opportunity for Cameco, including running their international offices in Perth, Australia, and also Ulaanbaatar in Mongolia. My VP of Exploration is Nathan Bridge, former Cameco geoscientist, known him a long time. And he joined me in 2021 to help move this portfolio forward as my VP of Exploration, a wealth of experience in the Athabasca Basin, including discovery and delineation of the nearby Fox Lake deposit owned by Cameco and Orano. At the board level, slides are not moving. I apologize for this. At the board level, our new chair is Karen Lloyd. She's former Cameco Director of Marketing, wealth of experience on the marketing side. She was responsible for moving the pounds for Cameco into those long-term contracts on a global scale for many years. More recently, Shane Shercliffe has joined us, ex-Cameco Corporate Development, whom I worked with for a number of years at Cameco on a global scale, looking for those opportunities for Cameco. He's a new addition to the board. And then Jeff Gay is a new addition to the board as well. He brings the connections into Indigenous communities in the North through his connection with the Athabasca Group of companies. So a very strong board, very strong in the nuclear space, and very well connected to the regions in which we explore. Now, I've talked about this before. Small modular reactors are the key. And this is, beyond any new builds on the larger scale that may occur, this is going to be like Lego blocks. And when it gets going on a global scale, what it really means is that you're going to need even more uranium to fuel this new nuclear reactor fleet. Now, this is happening in Ontario. I've talked about this before. The Darlington plant is putting in 300 megawatts, perhaps even 400 megawatts of SMR technology from decision to first power, 6 years. In Canada, 6 years. This is an incredible story unfolding in the Canadian scene that will repeat itself internationally, most importantly in the US. And when that happens, it's going to need a lot more uranium to fuel this nuclear fleet. Now, we've seen some market fundamentals, some recent news, positive fundamentals continue to build in this space. Not only do we have production cuts or forecast cuts in Kazakhstan out of Kazatomprom, very significant primary supplier of uranium, but we've also seen Cameco facing some production halts at JV Inkai following some regulatory delays just a few weeks ago. And how long that's going to last, we're not too sure. But, geopolitics is clearly at play. And then you couple that with Microsoft, Amazon, among others, requiring clean energy to fuel their AI needs or their data center needs. And what you get is a scenario where you have increasing demand. In fact, demand we can't even forecast because we don't know what AI is going to do to this space, but also production curtailments, or importantly, a reduction in reserve base for the key assets on a global scale. Specifically, what I want to focus on today is Cigar and McArthur. Those are real, and you're going to have to find new primary production to backfill all of this demand and ultimately reducing supply. So when we look at this, and we've seen this before, but on the right, we have forward-looking 15 years. The demand line is green. That red wedge is what we don't know today, or perhaps SMR is coming down the road that's hard to forecast. But, this is a conservative model, and we're already short over the next 15 years, 1.5 billion pounds of uranium, let alone anything that might develop in the SMR world or new builds or extensions. That just isn't factored in here yet. So it's even larger, and we don't know how to really estimate that. So what this is setting up a scenario where you have primary supply pretty much known, secondary supply known or depleted. And now you've got a scenario where you're creating even more demand out there on a global scale, ones that we can't even forecast. The time is now to go out and make new discoveries because this wedge of opportunity is going to be filled somewhere. So how is that going to be done? Well, tier 2 assets around the world have a break-even price somewhere around $90+ a pound. That's break-even. That's not making money, which means you have to move into a step change zone somewhere around $100 to $120 a pound. $100 to $120 a pound sustained or forward sold in order to bring on tier 2 production on a global scale. Remember, because Kazakhstan, Cigar, McArthur, those are tier 1 assets. They don't need to operate in this zone. So they're making money closer to $30 or $35 a pound. So we're in a price environment that is not sustainable to build or bring on new production to fill that wedge we just talked about. And what is critical here is long-term contracting. Long-term contracting is the key. We've looked at this for a number of years. We've talked about it for a number of years. This is the signpost that is missing post-Fukushima. In the last 6 months or so, you've had a long-term price, that 10-year price, those long-term forward contracts moving from about a $60 price all the way up to $80. That's about a 35% increase in the last 6 months. That is a very significant move in the long-term contracting. Now, the 3 and 5 year, we're up a little higher, around 100. Now they've come down a little bit, but that's okay. They're going to move around. But what this says is there's still room to move. Remember, you have to incentivize that tier 2 production to come online, which means you have to forward sell the pounds from any production that might be coming somewhere north of that break-even price. And I view it as somewhere around that $120 mark. There's a lot of room to move here in the long-term contracting. That is one of the key issues that has to change if we want to bring on new production and ultimately even incentivize new exploration toward discovery. And that's where CanAlaska comes in. We are an active explorer and project generator. We pride ourselves on researching, acquiring, doing deals, all driven towards that discovery. Again, focused in the Eastern Athabasca Basin. We focus on the right geology. We're not a landholder. We're not about hectares. We're about opportunity for discovery in the geological space. So we're very focused on the geoscience when we go to stake new land. So we've been very diligent about the Eastern Athabasca Basin. I told you why, against all that infrastructure owned by Cameco, Orano, Denison. We are spending in the Eastern Athabasca Basin on one project principally. That is our West McArthur project. We are going to spend $12.5 million on the West McArthur project in 2025. That is an increase of about 67% year over year to our budget. Why? Because we've had continued success at our Pike Zone discovery. And that will be our focus in 2025. We do have some residual work on our Moon Lake South JV with Denison. We've also got some significant partner-funded exploration programs led by Nexus Uranium on our Cree East project, which I'll touch on at the end of this presentation. We are focused at West McArthur as a company. This is where we're going to build shareholder value for our shareholders in the near term. So let's look at this. Our drilling programs in 2025, focused again, West McArthur. We're going to be drilling from January through to about mid-April, taking a small break and then back to West McArthur in probably June through September to wrap up the rest of that $12.5 million drilling program. We also have Nexus Uranium earning into our Cree East project. Again, starting drilling here in a few weeks' time, moving through into probably late March or early April with that drilling program. And then again in the summer, going back to Cree East in what is probably about a $5 to $5.5 million exploration spend on drilling programs for Cree East. So there is a lot of news flow coming from drilling programs within our portfolio. There may also be some additional sole-funded projects here, depending on what our partners decide to do in 2025, which isn't known to us yet. However, we anticipate even more drilling coming from us and news flow coming from us to our shareholders through the remainder of the year. So our portfolio covers all target scenarios in the Athabasca model, right from shallow Eagle Point or Arrow type deposits through the mid-depth like Cigar, or even deeper like at West McArthur or McArthur River, where we're drilling in that deeper sandstone. But that's an advantage. That deep sandstone, think of it like a dartboard. We get to play with the entire dartboard looking for the red center, not just playing and looking for the red center like you might have outside the Athabasca Basin. So when you know how to handle this, the large alteration halos that come with these very large deposits in the deeper sandstone like McArthur River, you can use that to vector into where the best uranium mineralization is located. And that's exactly what we've been focused on at our West McArthur project. We are focused along what is the C10 corridor, along the C10 south arm of that corridor, but it's already host to Cameco and Orano's 70 million pound, 8% average grade Fox Lake deposit. That is nearby, just a few kilometers from our property boundary. Then we've got our 42 zone, and then just 4 or 5 kilometers downtrend, we've got our Pike Zone discovery, that ultra high-grade uranium that looks every bit like a McArthur River type analog. McArthur River, no different. A series of pods or lenses or zones over several kilometers make up McArthur River, but along trend, you've got the P2 main zone. If you go north off of this image, you've got the Christie Lake deposit, all part of the P2 corridor. That's how these things form. They're in corridors. Use the alteration, use the mineralization, use the structural knowledge that you learn, and then you carry it through to make discoveries. And that's exactly what we've done. Now, the location of the Pike Zone is 15 kilometers from McArthur River. We drive here year-round. Winter, summer, spring, fall, doesn't matter. The haul road down to Key Lake is that road on the right of this image. It's an ideal location to go out and make a Tier 1 discovery next to the infrastructure, and our partner is already Cameco. So what were we doing in 2024? Well, these are the results from 2024, at least some of the results from 2024. Ultra high-grade uranium mineralization. These are grades and thicknesses akin to what you might find at McArthur River. In fact, zones like Zone 2, any of the zones really at McArthur River. These are the grades and thicknesses that you start to see when you're into one of these tier 1 assets. And that's exactly what we drilled all through 2024. Some incredible grades, up to grades, 24% over several meters. I think 4 meters of 23% in places. This is incredible stuff. Metal in a box. We have grades here as high as 70%. It's heavier than lead. This is what you see at these tier 1 assets. Any of the zones of McArthur will look like this. This is exactly what we think we are onto at our Pike Zone. Now, what are we going to focus on? We're going to focus on 2025 filling in these areas. So we're going to extend the mineralization between the two pods. That'll be one drill's focus for a better part of at least the first half of the year. The second drill will work to the right or to the east on this image. We've learned a lot last year what's controlling the ultra-high-grade uranium. So we're going to trace that out over the next several months as one drill focuses on that area. And then the third drill is going to be on the left-hand target area, an area where we don't have a single drill hole for 1,000 meters to the west from our Pike Zone discovery. Completely open. All the signs we see in the hanging wall here and the sandstone upper levels are pointing us to the left as areas where we should be looking for ultra-high-grade uranium mineralization. Those signposts that we learned from working in 2024 on Pike Zone are really guiding our exploration efforts in the first half of this year. So we have 3 drills working in this area, all geared towards delineation, extension, and hopefully changing our shareholders' value through continued discovery of ultra-high-grade uranium. Now, we keep talking about pods or pearls on a string, and this isn't new, but it's good for everyone to understand that McArthur River is actually made up of 7 distinct zones or pearls. You put them all together, there may be 600 meters in strike length. Actually, a very small target. So when I talk about a dartboard looking for the red center, this is it. So it's very hard to find these zones or these pods. And this is one example from McArthur River where you have the Zone 2 analog that's 350 million pounds of uranium in what is the space of a North American football field. Now, to put that into context, here in schematic, this is what it looks like. It's 80 meters long, 20 to 25 meters wide, and up to about 70 meters down into the basement. An incredibly small target that's host to 350 million pounds of uranium. That's incredible. That's a tier 1 asset in itself, let alone any of the other 6 zones that make up McArthur River. So when we look at this, we have to think about what are we seeing at Pike Zone. So let's take that 80-meter box by 20 to 25 meters wide, making it 65 or so meters into the basement. These are the red zones that you see on this image. I showed this last year, but I really want to hammer home the point that you can put a lot of contained metal, a lot of uranium at these grades and thicknesses that we're drilling at Pike Zone, very akin to what you see at McArthur River. This in itself could be a tier 1 asset if you fill this red box with equivalent type of grades and thicknesses that we've been seeing through 2024. So we're going to have one drill working on filling this red box in the first 3 to 4 months of next year. We've got a second zone shaping up. Remember, we hit a new zone in the latter part of the summer where we're hitting equivalent grades 100 meters to the west, completely open further to the west for another 900 or 1,000 meters. Not a single drill hole. So we're going to have another drill working on this, filling this red box in. Remember, we could be onto 2 Zone 2 type equivalent boxes just in the space of what's on this image. So it's important to understand scale when you drill these types of grades and thicknesses that you can build a tier 1 asset on this screen, literally without leaving this screen. And we're going to have a third drill in this area working on what could be the next one. And that's going to be in the first half of 2025. So you can see where this story starts to come along very quickly in the first half of the year as we continue to drill this with 3 drills. In what we estimate for that 12.5 million to be about 40 to 45 unconformity tests on this target, we're going to fill this with information. We have to drill the holes. We have to hit high-grade uranium mineralization, ultra-high grades as much as possible. But now we have an understanding of the fault. We have an understanding of what's controlling those ultra-high grades, and we can tailor our program to delineate it appropriately. And that's exactly what the team is focused on doing in the first half of next year. So this story will evolve quickly. It's going to evolve very fast. And it's an exciting time. Now, how are we doing this at 750 meters depth of sandstone? Well, depth for us in drilling is a non-issue. Given our backgrounds from Cameco and Orano, they routinely drill at these types of depths. And when they delineate these types of deposits, they use a deviation technology, a directional mud motor. We basically turn 800-meter holes into 300-meter holes. The image on the left is our drilling pattern from one drill last year. It hasn't moved since February 1st. We've been able to drill all those holes from one pilot hole. We come up a couple hundred meters into the sandstone, we offcut, and we go test the target again. We can hit my desk at 800 meters depth. That's how accurate this technology is. So what does that mean? Well, it means our social license is intact. This is an image shot last August showing those two rigs. This is the footprint of 24 months of work on Pike Zone or in this area. Our social license is intact. Very small footprint. That drill in the foreground has not moved since February 1st. Probably won't move in Q1 of this year. The drill behind it went in the summer. It hasn't moved since that time. It probably won't even move in 2025 as we continue to delineate the Pike Zone. And the third rig envisioned to be just up on that hill, another 100 meters further in the distance, working on extensions to Pike Zone. This is an incredible outcome. It's run by our geoscientists in-house. And we saved in 2023 $1.25 million to spend for our shareholders using that little device downhole, that deviation technology, that oil patch technology to actually hit this target and delineate it. We're among the lowest cost per meter explorers in the Athabasca Basin. Incredible result from the team at CanAlaska. So we need to think about the strategy here. The strategic opportunity in front of Cameco is to fill the Key Lake mill. Now, Cameco has a clear reserve depletion problem. McArthur River will be done in 14 years. This is data from their website. Will be done in 14 years when they go to 25 million pounds of production per year, which they've announced they will do. That's 14 years away. If Pike Zone is real, it's 15 years out to even first production. There's already a production problem at Key Lake. The next best asset in the pipeline in the southeastern Athabasca Basin is the Millennium deposit. It's 104 million pounds at about 2.6% average grade between 600 and 700 meters depth. It is a tier 2 asset. We have an opportunity to make Pike Zone a tier 1 type deposit. And if that's the case, it automatically slots into the pipeline for the southeast Athabasca. And ultimately, the Key Lake mill needs feed. It's a perfect scenario in a perfect price climbing environment at a time when the world needs this production. We have a lot of other things on the go. We have new exploration opportunities, not necessarily funded by CanAlaska. One of them will be a Cree East project. That's part of a $19 million option deal we did last year with Nexus Uranium. And what that means is that Nexus is going to come in, and they're going to spend about $5 to $5.5 million through winter and summer drilling programs on our Cree East project, just 40 kilometers west of the Key Lake mill. There's already uranium discovered here. There's incredible alteration, looks every bit like a Cigar Lake type analog at depths between, say, 200 and 450 meters depth. So a good depth range. It looks incredible. Now, Nexus is going to start spending this year. It's going to start earning in. We can expect a lot of news flow from Nexus Uranium and their exploration efforts on our Cree East project. Now, as part of the deal, CanAlaska will be the project operator in 2025 for at least the first phase of exploration. So our team is directly on the ground, managing the program and guiding the drill results accordingly. So that should be comfort for our shareholders as CanAlaska works to move Nexus Uranium's exploration spend on Cree East forward through 2025. So we believe our pipeline, specifically West McArthur, has started CanAlaska on a rapid valuation trajectory upward. And assuming continued success at Pike Zone through 2025, we should move up that curve very rapidly. If we look back at the NextGen story back to 2013, 2014, they sat in this sort of low valuation period until the market realized, wow, they have a tier 1 asset, and then they quickly turned into $1 billion+ company. That's where we aim to be at 130 million market cap. Given the results that we produced in 2024, I believe we are highly undervalued. And I expect that the market will re-rate us with continued success at Pike Zone as we move into the first half of 2025. Again, the drills have basically started turning, and we will be off to the races here shortly in terms of target testing and continuing to delineate, expand, and unlock shareholder value on our Pike Zone discovery over the next 6 to 8 months. So we truly are advancing a new ultra-high-grade uranium discovery. This is not a zombie project. This is a brand new ultra-high-grade discovery, less than 12 months old right now, that we are working aggressively to delineate and extend in 2025. We are hopefully powering the future through delineation, expansion, and unlocking that shareholder value, which is critical. Unlocking that shareholder value through this discovery and work in 2025 for our shareholders. So I encourage everyone to join us for the discovery journey as we move the Pike Zone forward in 2025. Thank you for your attention.
Thanks, Cory. Great presentation today. We have a lot of viewer questions, so we'll try our best to get to all of them in no particular order. Our first one here is the company looking for financing of what kind? Equity, debt, JV, offtake examples?
Well, as you saw, we are well cashed at about $23 million in the bank today. It's more than enough to fund our exploration efforts in 2025. So we are not a revenue generator. We expense. So at some point, we obviously will have to go back to market to raise funds. There's different avenues as the company matures and as this asset matures. So we'll evaluate those accordingly. But, I would expect that we're under no pressure in the first 8 to 10 months of this year to go out back to market. And if we're lucky, we have a lot of outstanding warrants and other things sitting out there that could provide some significant financing through the year as we move this story forward. So right now, no plans to raise. Next opportunity may be in Q4 of this year.
Okay, our next question here is from Hugo. Do you plan to do a reverse split?
No. We're a very well-structured company at only 176 million shares outstanding. We are very well-structured for a company that's been doing this for 20 years. I would not anticipate any kind of reversal.
Okay. And what about increasing your land holdings? What are your plans, if any, for that?
Well, we are a project generator, so we are opportunistic. But as I tried to state earlier, we don't just stake land to hold land. We are not a real estate company. That is a false narrative in my view, because more land means you have to spend and dilute your shareholders much more on what is high-risk grassroots exploration play. So I view holding land as priority only in terms of geoscience, not in terms of hectares. It just so happens that we had an opportunity over the last 5 years to build our portfolio to its current size because nobody was paying attention to the right geology, in our view. And we put our brains together and we came up with a strategy that really sees us in on what we believe to be the highest priority land in the Eastern Athabasca Basin up against that infrastructure. So we will continue to stake where we see value from a geoscience perspective, not from a holding hectares perspective.
Okay. So we know the political environment in Canada is changing. Do you see these changes affecting CanAlaska's business plans?
I don't. In what sense? I guess that's a good question. I mean, the political landscape is changing. Yes, it's changing. But I think what's been consistent in the nuclear space is that no matter which party is in, you will have support for nuclear and, more importantly, from our perspective, discovery and production. I don't think that's going to change no matter which party is in the landscape in that sense. Are there things that could come down the pipe? Maybe, but I think it's only good for critical metals, given everything that's in the news today in terms of climate change and AI needing clean energy. There's all sorts of indicators, among many others. There's all sorts of indicators there that suggest that critical metals will continue to be critical, and if anything, it's going to get better for uranium than worse, in my view, from a political standpoint. And that's I think a very good thing for the industry.
Okay. We have a question here from Alexander. When will the drilling of Zone 2 be completed?
Well, Zone 2 is the analog from McArthur River, so we don't have Zone 2, but the Pike Zone that we're working on, that depends on the geology. Until we find the limits of the zone, we can't really state when we're going to be done drilling it. But what I will say is that we have a lot of open trend here and prospectivity nearby that we expect at some point the mineralization to stop and have limits. But we also expect it to have multiple pearls along that string. And I think that's sort of the phase we would switch over to once we're done defining what we think we're onto now. Then we'd move on the trend and look for another pearl nearby, which only adds value to the whole discovery. But I think what I want to emphasize is that those images that I showed in terms of the little red boxes, Zone 2 analogs, we do not have to move off of those images, drilling the grades and thicknesses that we've been drilling in 2024 to make this a tier 1 potential asset. And that's key. The key is to understand the scale we're operating at. We don't need 2 kilometers of trend here or of mineralization to make this tier 1. We need a few hundred meters at best at these grades and thicknesses. And that's key to understand the scale we're operating at. And if we're correct, and if the geology holds together and these ultra high grades continue, then we will build this story very quickly. And that's the hope in the first 6 to 8 months of 2025 is that we start to prove that this truly is looking like a tier 1 asset.
Okay, Alex, thank you so much for your question. Moving over to Richard, which countries are showing increased interest in uranium? Do you have any info on that?
Well, I think almost all. That's a hard list to come up with. But what I will say is, where are the new interests in even existing nuclear countries occurring. And I think you only have to look to countries like the UK as an example, where they want to be full nuclear in about 10 years. That's incredible to think about. Poland, as another example, going big into the SMRs, at least optically. The US, wait until the US starts moving down the SMR path, opening up jurisdictions that can't support the big reactors, but can actually use SMRs to tailor fit to the scale of need. And we're not even talking about AI, and that could be on a global scale. I mean, where does Microsoft park their data centers globally? Where does Amazon park their data centers globally? Where does the AI world set up and envision tapping into nuclear energy? One of the things at the UAE, they couldn't even see this happening 15 years ago when they went nuclear, the benefits of it. And now all the data flows from the east to the west through UAE. Why? Because they need an energy boost to move that data transmission. And UAE is full nuclear. And that's cheap, reliable, baseload energy that's non-fossil fuel. They're reaping the benefits now as a country. So I think you look at these models and the question becomes, where isn't it going to be accepted? And even at the WNA level, on a global scale, you've got the more advanced countries, Canada, US, among others, thinking ahead and going, how can we help developing nations, maybe in Africa in certain places or other places around the world, move faster along the non-fossil fuel path? That's a conversation that's happening on the global stage that no one really ever hears about. But if you attend these things, you start to hear it. And that's incredible to think about. So the question becomes, where won't it be applicable? I think it's going to be on a global scale in some fashion or another, led by the countries that are already accepting it traditionally. And that's an incredible thing to think about.
Mm-hmm. I want to take a second and discuss what is your top priority, which is the West MacArthur JV. We know Cameco is not contributing to the budget this year. So I want to ask, why do you believe they're sitting on the sidelines, and how much will this further dilute Cameco?
Well, I mean, that's my top priority is to have the team develop Pike Zone into a tier 1 asset, first and foremost. Do the work necessary to get to that understanding as fast as possible. And, hopefully it's a tier 1, but we have to do the drilling work. So getting them everything they need to go out and do that step. Now, in terms of Cameco, I mean, that's a sensitive topic. I can say that, I don't understand their decision process. It is theirs. They own it. It's internal and not part of what I hear about. However, I will say that under the joint venture, they do have one more year of, let's call it free pass to watch the results. So before there's other JV triggers that happen. So, if I was them, I'm sitting back going, okay, let's let CanAlaska carry this forward. We retain certain JV rights within the joint venture, which allows some protection to Cameco to sit on the sidelines for one more year, not two, but one. Knowing full well that, if an auction process were to start, they would at some point have to come in on that process if they want the asset. So I think they're in a position where, they get one more year to look at this, let us carry it forward. And really, what is the cost under the ownership in the JV for a $12.5 million program? It's a contribution of $1.5 million. Now, that is not a lot for Cameco, but from a dilutive perspective, it's great for CanAlaska. And I didn't believe we would get an opportunity to add value in this project through dilution again in 2025. And I'm actually very pleased, and you saw it in my statements around the news release last week, is that I'm very pleased to reward my shareholders, or our shareholders, with increased interest in the West MacArthur joint venture through Cameco's dilution. We anticipate on that $12.5 million spend to add maybe another 2% or so, maybe a little more in interest in this project by year-end 2025. Think about the value. If this is a tier 1 asset, remember, we might be there in the middle part of the year. If we have line of sight to a tier 1 asset, each percentage is worth a lot of value. When you own a tier 1 asset, it's incredible. So I will gladly trade $1.5 million of spend for CanAlaska for the opportunity from our shareholders to gain another couple percentage points in what could be an incredible asset in a world that demands its presence. So I'm very pleased to share with my shareholders we have the opportunity to gain interest in this incredible asset. And that's what more can I say? It's Cameco's decision within their rights, and they made it, and that's fine. We'll move forward, and I'm very pleased with that outcome.
Okay, well, speaking of moving forward, you outlined an aggressive 2025 exploration program at West McArthur. Can you provide more details on the specific exploration activities planned for this year? And do you have any key objectives that, in terms of advancing the project that you're aiming for?
Well, it'll be drilling focused. Let's be clear. It will be focused on drilling. Now, we do have, let's call it an extension to the C10 South corridor that hosts the Pike Zone. That extension needs some geophysics. So it's the same geophysics that we ran that ultimately led to the discovery of the Pike Zone. So we're going to continue that for another, about 5 kilometers or so downtrend. And what that allows to do is see the continuation, see what the corridor does as it approaches the boundary with Orano on the other end. And I think that's critical to understand the rest of that corridor, because clearly it's prolific. And clearly, as I articulated, these occur in, groups or pods or zones along those corridors. There could be another one sitting to the southwest. We don't know, completely untouched with drill holes. So we're going to image that with geophysics, but that's a low cost. We might be looking at $400,000, $500,000 and spend maybe a little more to actually image that. And then we'll know what we have downtrend in terms of the conductor. But let me be clear, everything else is going into drilling at the Pike Zone. That's a lot of work. That is a lot of drill holes into that target. The main driver is to try and build out the ultra high grade uranium that is Pike Zone. Again, we don't have to move off that image if all things continue to make this a potential tier 1 asset. The ultimate goal is to get ourselves positioned for the first resource number to come out of Pike Zone. And, that could be back half of this year, but with lab delays being well known out there, it may push us into 2026. But that doesn't mean we can't do all the work and understand the results of that work, say by the end of September, to make that decision whether we go to a resource number or not in the next number of months following that. So the goal is get to the first resource, which is basically for the reason of re-rating the company officially. When you set the floor, when you put pounds in the ground, you can then start to value it. And right now it's speculation. Once you give a concrete number, then you can actually put a dollar value that makes more sense for CanAlaska, in my view, than it does today.
Sticking to the Pike Zone, how much potential is there along the strike from the current extent of the Pike Zone?
Well, it's immense, actually. As I tried to articulate, for 1,000 meters to the west, we don't have a single drill hole along that conductor. Complete unknown. Now, the one hole we have 1,000 meters away hit the structure, not quite in the right place, but the alteration that we saw, the chemistry, is all highly suggestive of what we see around Pike Zone. So, it's just telling us that 1,000 meters away, we're still getting the fluid movement down that structure, and we could be close to something else in that location as well. We truly don't know. So at least 1,000 meters to the west, and only sparse drilling from there. And then, as I just said, we don't have any geophysics or drilling really for another 4 or 5 kilometers down to the property boundary with Orano. So that's a whole different phase of exploration down the road. Now, moving the other direction to the east from Pike Zone, we of course have a couple holes that are mineralized, and we overshot the fault. So we think the fault now comes through there. Now that we understand Pike Zone a little bit better, we can see what's happening, say another 100 meters to the east. And then beyond that, we don't have any drilling for 400 meters at all. So there is literally 1.5 kilometers of unknown around Pike Zone, complete unknown. So immense potential, immense upside. Again, pearls on a string. There could be, and I would expect to be, multiple pearls along this string. We just have to go out and find them. But again, we don't have to move off of Pike Zone to make this a significant asset based on the grades and thicknesses that we've drilled to date.
Right. Well, despite all the excitement surrounding the West McArthur, CanAlaska is not a one-trick pony. Can you tell us what is being planned for your other projects?
Oh, we are not a one-trick pony. Everything else we're doing, our spend, a little bit of prep work on some other projects that are newer that we have to do some airborne geophysics on just to get them ready for either a deal or maybe some peripheral work on our part, but ultimately a deal. And obviously we'll continue to do deals. We continue to farm out projects, things like Cree East, a $19 million deal. That's a lot of work over 3 or 4 years in drilling to move that forward, that project forward. And that's not including cash and shares into CanAlaska. We own over 20% of Nexus Uranium through that deal already. So that's one way that we build shareholder value is we take big stakes in these companies. So we take cash and shares along the way through the deal, ultimately bringing hopefully value back to our shareholders And if they're successful, then we have a residual interest. In this case, I think 25% to Cree East at the full completion. So we'll own 25% plus a royalty. So that's our general business model, which is not unique. There are others in the basin, our peers, that do the same thing. And this is why we can't do it all. If we were to explore Cree East ourselves, the dilution that I would have to accept for the company, or that we'd have to accept for our shareholders, would be just too much. West McArthur is the focus, but all these other peripheral projects are either open for joint ventures with other parties or are being moved forward by other parties through already existing option or joint venture deals. So it's just part of our model. So we've got a lot of work going on in our portfolio. We encourage our partners to explore and to move them forward, and incentivize them along the way with hopefully some technical expertise.
It's an exciting time for CanAlaska. Cory, I want to thank you for joining us today. Do you have any final thoughts for viewers that are tuning in today?
Well, I think, as I've tried to share today, the excitement for CanAlaska, the team, the board, hopefully our shareholders, is that, this truly is the Eastern Athabasca Basin's newest high-grade uranium discovery, ultra-high-grade uranium discovery. The last time we've seen anything like this in any way, shape, or form is IsoEnergy's Hurricane Zone in its early stages. Before that, it was 2014 with NextGen's Arrow, and before that was Rough Rider and their with Hathor's Rough Rider. So these things seem to have a periodicity in terms of discovery. Every 6-8 years, you get one of these big ones coming along that turn into something special. This is truly not a one-hole wonder. This is truly on the path towards some sort of resource scale, assuming things continue in 2025 as it did in 2024. I'm pretty excited about the future, and all I would say is, join us for that journey that is the Pike Zone in 2025 and beyond. And really, please stay tuned for results, because they're going to come fast, with 3 drills turning on this project, drilling hopefully very high-grade uranium. This is going to be an exciting outcome by middle of year, I believe. So,
well, I wish you the most exciting and best of luck in your 2025 adventures. I hope that we get to talk again soon. I know we'll be seeing each other very shortly as well. So to all of our viewers here today, thank you so much for all your questions. Keep them coming. We'll try our best to get to them after the show as well. The replay will be available online shortly too, so keep tabs on all of our social profiles. You will see it posted. Tomorrow, 2:15 Mandalay Resources is going to be the next webinar. So if you're interested in that name, go over to redcloudfs.com and make sure you register. Other than that, all of our disclosures are posted on redcloudsecurities.com. So head over there for all of those. I, again, am your host, Nicole, and I'm here with Cory from CanAlaska. Thanks to everyone for watching.